Hello and welcome everybody to this XTB video. My name is Walid Koudmani, Chief Market Analyst for XTB. And in this brief video, we're going to be covering the ongoing tensions on the Ukraine-Russia border, what's been happening, what the markets are expecting, some scenarios, and what kind of an impact they could have. Obviously, this is the main topic so far this week. With the lack of data releases, markets and investors are focusing on this geopolitical tension, which might have widespread impact across the markets. So today, very briefly, we're going to be covering some of the markets that may be impacted, what these scenarios that the markets are expecting are, and what potential consequences they might have. So let's start immediately by a brief recap of what's been happening. Some of you may know there have been ongoing tensions on the Russia-Ukrainian border with a potential invasion from Russia of Ukraine, which the West and America and the European countries are trying to avoid, obviously. That has led to some negotiations and some more tensions and uncertainty that has reflected in the prices of some assets, some stocks, and some commodities, where we see a clear correlation between the energy market and the European markets, and then as a result, some of the US stocks as well. So briefly, some of the stocks that may be impacted to begin with would be Russian stocks, which are very susceptible to sanctions and would be susceptible to some sanctions from the Western governments. Some of the stocks may include banks such as VTB and Sberbank, as well as the general Russian index, which on the Xstation platform is RU50. And we have seen some moves on that index as well. Some other moves we saw today were some uncertainty on European markets with the DAX and other European markets dropping as well. We saw some reaction on gold, oil reaching another high, and then nat gas really uncertain as well because Europe as a continent relies a lot on natural gas from Russia. So besides those stocks from Russia, we are also seeing some repercussion across US markets who are also very uncertain. We have the US earnings season still ongoing, although some of the major companies or most of the major companies have already released their reports, but still we have some throughout the week, which you can find on the economic calendar on the news section. Besides that, commodities have been very impacted with oil, gold, and natural gas, as well as platinum, palladium, which are some that maybe not many would consider, but Russia is actually very, very important for those markets as they are one of the lead exporters of those goods. Commodities, as I said, platinum and wheat as well, because Russia and Ukraine both are exporters of wheat, so we can see some reaction in the wheat market, especially if this were to escalate moving forward. FX, we can see US dollar, which tends to be a refuge in times of uncertainty and so attracts more liquidity. We could see some reaction on that market as well, and the ruble, the Russian ruble, of course, as a result of the direct impact that a conflict might have. There are three scenarios that are mainly being priced in or considered by the markets, and those scenarios would include: one is the worst case scenario, which would be the scenario of invasion, which is has been hinted, especially Friday, from the US intelligence, where that is the scenario where Russia would invade the Ukraine, and then there would be some sort of a consequence with sanctions potentially, or even more escalation, which could lead to some more interest in safer assets and then a risk-off approach from the markets. The other scenario would be the prolonged tension, which is what's been happening lately, where really there's a climate of uncertainty and markets really are on edge constantly, reacting to any potential news and ignoring some data, which we don't have that much of at the beginning of the week. And we have seen that kind of scenario play out at the moment with just uncertainty and a lot of volatility across these markets. And then we'd say the third case scenario, which would be a more potentially safer scenario, which would be a compromise between the Russian and the Ukrainians and the Europeans and the Western governments, where an agreement would be reached without to not escalate conflict, and that would see somewhat of a return to a more traditional approach on the markets, where the stocks and gold would then readjust in that accordingly. Let's take a look at the charts very briefly to see what's been happening so far. Let's take a look at gold first of all. Gold, you can see continuing the upward move as always, as we've seen throughout this really escalation of tensions. So we can see that the move started around the end of last week, around 1820, and then we see a almost 2.7% increase across just a few days, with gold reaching 1870, the highest level basically since November 2021. At the moment, testing that high or approaching it very closely, and definitely a market to keep an eye on. Oil, which started the day with a gap higher, reaching $96 and then pulling back shortly after to 94.17. At the moment, testing a previous reaction area, which if we draw a horizontal line, we can see roughly where this is around the previous highs, but still extending the upward move, which we've seen from oil quite consistently. That gas has been a little bit more uncertain with rise in demand because of the winter season, which saw prices and then reflected on consumers as well, this price of energy increasing constantly. And now we've seen actually a 25% drop over the last, let's say since the beginning of the month, but at the same time, still trading in a very important area, breaking below the 200 SMA, which you can see here is the blue line. And again, another market that's very susceptible to any sort of tensions along that border. Russian stocks, as I mentioned, very, very nervous because of potential sanctions on Russian companies, which would obviously then reflect onto the stocks themselves. And the Russian index, many investors would be hoping for a resolution of this conflict in a more peaceful manner. US stocks as well, suffering from this uncertainty as well, and the potential reaction that we might see from Western governments. So a conflict has been kind of accounted for and would be the worst case scenario for these markets, which would potentially benefit some of the more traditional safe haven markets while detracting some influence from the more safe or the less safe risk on approach that we were starting to see in these markets as well. As I said, USD ruble, so USD RUB on the platform, we can see an increase from the US dollar, which tends to be more favored in a scenario of more uncertainty. So hopefully this video was useful. It was just a recap of the current situation, what kind of situation we're expecting, the potential scenarios that the markets are expecting and investors would then be accounting for, and how these might impact the markets. So hopefully this was useful. Thank you very much. My name is Walid Koudmani, Chief Market Analyst for XTB. Good luck with your trading.